Well, Tata Steel Long Products has delivered a great set of numbers in the fourth quarter. Remember that in general, we were expecting the ferrous space, the steel space to do very well. Let me remind our viewers that Tata Steel Long is, of course, like the name mentions, is in the ferrous space. But what adds to it is the fact that it is into specialty steel. So automatically, its realizations, its margins are much better than its peers, its own parent company, and that is Tata Steel. Another point to remember is that Tata Steel Long was created by Tata Steel Limited after it acquired Usha Martin, which was anyway in the specialty steels category. So it made an umbrella for entire the specialty steel product portfolio and called it Tata Steel Long. So now that you've had a little bit of a refresh on what this company is, it's relatively a smaller one. I mean, the market cap is around 3,000 crore rupees. Let's tell you what exactly it did in the fourth quarter. Firstly, revenues increased more than 1,500 crore rupees in this quarter versus 1,000 crores that it posted in the corresponding quarter, a surge of 54%. But the EBITDA is where really we have seen a great performance. The EBITDA has increased from 136 crores to 500 crores. It's almost quadrupled. And that obviously has reflected on the margins as well, which have more than doubled from 13.5% to 32%. Profit after tax as well has come in at 43 crores after just about broke even in the corresponding quarter. Now, let me tell our viewers that this improvement that we are seeing in the financial parameters has not just come in on a year-on-year basis, which I suppose is something that we are expecting because steel prices have increased tremendously, but even on a QOQ basis. So even sequentially, we are seeing a continuous improvement. This after the Q3 numbers have already been very good. So take, for example, the realizations. In Q3, we had anyway seen almost a 10,000 rupee per ton improvement in the blended realizations. In this quarter, it's come in at almost 3,000 rupees as per analysts. So there's been a massive jump in realizations in the second half of FY21. The EBITDA per ton as well, as a result, has improved. The margins as well. In the current quarter, it's at 32.2%. Previous quarter is at 30%. So that improvement is continuing even on a QOQ basis, which is even more impressive. The other parameter that I would like to talk about is how they have done on debt. Firstly, the capex requirement has reduced in the fiscal year 2021 for obvious reasons. And all of this improvement in cash flows, which has come about because of, the higher realizations and, the better margins as well, has been utilized to reduce debt. So the borrowings as per the balance sheet has close to halved. The net debt has more than halved during fiscal year 2021. I'm comparing March 2021 to March 2020. And obviously that's being seen even in the finance cost. There was a sharp reduction in the